Let's start with a check on the prices of gold, which have come off their 6-month lows today as bargain hunting surfaced and brought the metal at lower levels. Gold prices on your screens are trading nearly 1% on the higher side. We've seen a high of 12.26 as well in the intraday market there. It's the improving outlook for the global economy and the Fed's decision to start tapering its QE program, which will cap too much of gains into this space. But today clearly has been a good day there on your screens. The Brent prices also are back above 111 a barrel. We have seen 2 days of a decline, but today clearly has been a stronger day. As of now, in the European markets, there has been some profit taking as well. There have been fears of output cuts in Libya and South Sudan, and that is something that would continue to add premium to the prices. Let's also take a look at then the Indian prices in crude, because that has been quite choppy. We did see they start on a positive note, but there has been profit taking on NYMEX, and ditto is the case with MCX. Very flat trades coming in on your screens. Let's take it to the experts then, and joining us on the show are Ajay Kedia. He's MD and Research Head, Kedia Commodities. On air also is Vijay Bhamwani, who's author and CEO, PSPLindia.com. Vijay, hi, let's start with you first, and let's start with the gold price. Then what a rebound in the last 24 hours. What would you attribute that to, and do you see it sustaining?
Manisha, sustainability is not something that I am very clear about at this point in time, but the rebound is fairly good. And the fact that you're seeing a percent or higher of trade, and that too sustained over the last couple of hours, does seem to indicate that there will be some amount of short covering also, because there was a whole lot of shorts built into the system which will now get squeezed. So probably 29,000 is a level that I would watch out for as a possibility. And as far as silver is concerned, relatively I'm seeing a higher amount of relative strength in the white metal, because the bear covering on that counter is significantly higher. And as far as sustainability of both is concerned, I would watch the next 2-3 days, because both these counters do tend to see prices flaring up briefly, but surrendering all the gains within the next 1 or 2 trading sessions. So if this time around it's going to be different, the prices will need to stay up for at least 3 or 4 trading sessions.
Ajay, how are you looking at it? The way it has been performing in the last 24 hours, not just the global markets, the depreciating rupee also has added to some premium into the Indian markets as well.
Good evening, Manisha. If we have seen a very choppy trend in month of December, no doubt today we have opened with a very good gap opening, almost 2.5% on domestic market. No doubt rupee depreciation has added some more gains in case of gold and silver. But overall, if we see the fundamental doesn't change. Last year, in 2013, we have seen a very sharp fall in international market and almost in silver around 4% domestic market. Timing, maybe we can see some bounce in case of gold near to 29,000, whereas in case of silver, as base metal has rallied very well. So we expect that silver can break 45,500 on higher side, may test around 46,500 in near term. Generally, it has been observed that from last 4-5 years that China market keeps buying before going a New Year holiday. So maybe a short-term span may be very good supportive for all bullions. But overall fundamental for 2014 first quarter, we expect that again on higher side we can see selling coming back in the market.
All right, so a good day for precious metal space, and perhaps some buying strategies could work as well. For the longer time, of course, we still are looking at some bearish cues there. But let's get energy on your space. And Vijay, how would you look at the crude oil prices and natural gas as well? 2014 saw a run-up in natural gas prices, not so much for crude. Do you see those positions reversing as we start a new year?
Manisha, I would still maintain my view that the 285 odd levels on natural gas will be a resistance at this point in time. And where crude oil is concerned, I think 62.25 is a level which will act as a glass ceiling. Now, support for natural gas is between 254 to 258. At those levels, I would still maintain my view that a short-term trader might just want to start accumulating some longs. Highly risky though, but it would offer some upside potential. At 266, I am not comfortable buying as of now. But given another 5 to 7 rupees of a decline, and I am open to the idea of initiating some long positions.
Ajay, how are you looking at the crude prices now? Because we haven't been able to break above 6,300 for quite some time now. Ditto the case with 5,800 on the lower side as well. Do you see this as a broad range continuing for the near term at least?
Yeah, at least for next 15-20 days we can see market will be very much choppy, particularly domestic market. No doubt today rupee depreciation has supported a little bit, but I think stories are just colliding each other. No doubt in last week we have seen some concerns was cooled down because of Libya production can hit in the market, but still it is just a questionable that what is the level of production will be back in the market. Timing, I am expecting that range in international will be $97 in lower side and 101 on higher side, but overall longer period definitely all the supplies from Iran, Iraq and Libya, if comes in the market, definitely we can see first quarter prices coming back near to $90, but short term definitely there should be a jump again near to 6200 to 6250 on higher side, and support can be near to 6000 level, 6050 level.
And it has been a good day for the base metal space as well. More than 1% of a gain coming in across board for most of those base metal prices. Something like a lead, nickel even saw 2% of gains on the MCX prices. Vijay, again, is it like a one-day phenomena, knee-jerk reaction to the, the double thing that we saw gain in the international markets, lower volumes and the depreciating rupee?
Manisha, the depreciating rupee, in my opinion, tends to be a bigger factor here because I think the rupee-dollar parity is what is imbibing a short covering in nickel and other industrial metals. Although in the absolute near term, most of these industrial metals were at the lower end of their trading bands, I would expect overhead resistance to cap gains here. And unless nickel basically starts to trade above the 880 to 890, 888 to 890 band, I would say the rallies are likely to be marginally capped here. Ditto with aluminium, 112.5 to 113 is a level I would watch out for. Unless that is overcome, copper another 5 rupees on the upside, and I expect selling pressure to cap the recent gains. So I think this is a fairly strong short covering based rally, of course coupled with, like you rightly said, the rupee dollar parity. But sustainability at this point in time is kind of questionable.
Ajay, how would you want to trade the intraday market today for the base metal prices? While the Asian and the European markets have been strong, do you see US also opening up to that kind of euphoria?
Yeah, definitely from past 15-20 days, or if we say from last 2 months, we have seen a very good recovery in US economy, and definitely that is very good supportive for base metal. Secondly, Chinese market is more important because from last 4-5 years we have observed that every time whenever China market goes on holiday, it generally buys metal, and already in the month of October, November, we have seen there was a huge stockpile in case of base metals, but now I think that all the stockpile has started lowering down. So we expect that there should be a good rally in the whole January month. Especially, I will be quite bullish in case of quite bullish in case of copper and nickel. Copper, I think first time it is trading very well around 7400 in case of LME. If continue to hold 7200, maybe we can see level around 7750 or 7800. Domestically, definitely rupee weakness can add some more gains that can test around 500 level in shorter period in month of January. Whereas nickel, definitely market is getting a very good resistance around 895 level. As long as market is holding above 850 level, we expect that range will be a tighten, but if it breaks 895, definitely there should be a very good bounce up to 940, 950 in a span period of 1 month, 1.5 months.
Okay, so that's the view coming in for the base metal prices as well. More buy calls than sell today in the non-agro space. It has been, of course, a good day in the last 24 hours that we have seen coming in for this sector. To the agro space, where the sugar futures have declined today as the cane crushing in the top 3 sugar-producing states has gathered momentum. The swelling supplies and bumping up stocks at mills' warehouses is something that is taking the prices down. The crushing is in full swing now and supplies have picked up, adding to the woes of mills struggling to sell sugar when there are plenty of stocks all around. Remember, yesterday we did see 0.5% of gain coming in, but today we've given up half of those already. The guar seed futures did see a decline on expectations of higher production, though firmness in the spot markets due to thin supplies has limited the downside. And on your screens, nearly 3% of gain coming in yet again. It's a second straight day of gains coming in for the guar seed prices. Remember, we traded on an upper circuit in the markets yesterday. The chana futures then have declined on sluggish demand and ample carry forward stocks. The jeera futures also have seen gains coming in, 2.5% up in the intraday market today to their highest level in nearly 2 weeks on export demands. Though the large stocks and expectation of higher production has kept the upside limited here as well. The turmeric futures declined and weighed by large stocks ahead of new season supplies. On your screens, more than 0.5% of a cut coming in there. Vijay, to you first, and to chana prices, and we've seen a second straight day of some gain coming into the markets. Do you think the rally or the gains are intact at least for some time to go?
I think so, yes, Manisha. 2014, I've always maintained that chana and sugar is likely to be a year, in 2014 is likely to be a year which will be kind to the bulls. And a little bit of a sporadic selling might be seen in the next 2 or 3 months, but I think net you need to buy the dips rather than sell the rallies, because come March or April and I see chana prices, I would maintain my view of 3,375 levels. So at this point in time, the risk-reward ratio seems to indicate that every time you see a decline of 2% or more in chana, you should be going out there and buying.
Ajay, how would you look at the edible oil space? Because this is one sector which has started the year on a very flat to slightly negative note as well. We've seen 1/10, 2/10% of a gain in the markets today. But do you see it sustaining, or would you rather sell these moves?
Yeah, maybe we can see some choppiness again in edible counter, no doubt, particularly soybean. Previously we have seen a very good rally. Overall we expect that short-term weakness can be seen in the market. If we take a soybean, we see prices can drop down around 36.50 once again. And in case of soya oil, no doubt trading below 700 level, maybe some demand is subdued and prices are expected to slightly trading on lower side around 685.
Vijay, you pointed out on sugar and you said you would want to go long into that one. What kind of a range are you seeing in the medium term? And if overall you had to give a range out for 2014, how much would you see gaining throughout the year?
Manisha, the 2,700 levels on the mid and far month futures is a support that I would advocate as a constant. So you have a decline of a little over 100 rupees, whereas upsides are likely to be 3,000 to 3,050 band. So downsides of 100 rupees odd, upsides of 200 rupees odd. Here again, the risk-reward ratio clearly seems to indicate that you should be bargain buying at lower levels. Anytime you see a decline of 1.5% or more, I think sugar is also that you need to go out and buy, provided you're buying the mid and far month contracts.
Prices, of course, have been quite choppy in the previous year, and we've seen very mixed, very volatile gains coming in for that one, Ajay. But how would you look at the turmeric prices for the very near term? As the year has started, do you think this is one area that could see some gains coming in, especially given the fact that the supplies haven't been so much?
Definitely in 2013 already we have seen the carryover stock was quite high, despite that in the month of November we have seen prices was trading on the lower side around 4,600 to 4,700. No doubt since last 15-20 days there has been very good rally in case of turmeric because of quality issue in Andhra Pradesh belt, and I think today's and yesterday's fall was slightly a profit booking. We say overall we expect this season can start with a price around 8,000 in higher side. No doubt some choppy trading can be seen in next 2 sessions. If price drop around 6,100, 6,200, that will be a good level to buy again in the April future. Prices can go around 6,800 in a short-term period.
Vijay, how would you look at the mentha oil prices? Because while the previous year has been quite choppy and we haven't really ended on the higher note, we are looking at a couple of days straight of gains this year.
Manisha, mentha oil ideally should have rallied in the winter season. Unfortunately for the bulls, this year the rally has been elusive, and I've always maintained that had it been any other year like 2011 or maybe in 2012, I would have seen 4 digits on mentha. Since this year around that is not happening, the rally is likely to be capped at 920 to 940 odd levels if at all you go there. Unfortunately, support at lower levels is at 820 odd levels, give or take a few rupees. If that is violated, I think the bulls are clearly on the defensive. And if the winter passes by and the weather starts to warm up without the prices exceeding the 900 rupee levels, then I think this year around you're likely to see sub 800 rupee levels. So no bargain buying in mentha here.